Ever wondered how the wealthy turn economic chaos into massive opportunities? Well, buckle up, because today, we're biggest wealth-building secrets the elite use when the economy is falling apart. Recessions don't just destroy fortunes, they create them. The question is, will you be a victim or a strategist? By the end of this video, you'll see exactly how the wealthy position themselves to win when everyone else is panicking. But before we dive in, do me a quick favor. Smash that like button, share this with someone who needs to hear it, and hit subscribe for more game-changing insights. Trust me, you don't want to miss what's coming next. Now, let's get straight into it. Number 1. Government bailouts, the ultimate safety net. The rich play fast and loose with their businesses, taking on massive leverage. But the moment things go south, guess who swoops in to save them? The government. Unlike the average person struggling with bankruptcy, corporations deemed too big to fail get free money to stay afloat. Just ask the banks in 2008 or the airline industry in 2020. When things fall apart, the rich don't panic, they just cash in. Think about how the 2008 financial crisis unfolded. Big banks that took excessive risks were bailed out with taxpayer money, while millions of ordinary people lost their homes. Similarly, in 2020, airlines, cruise companies, and major corporations secured billions in government relief, while small businesses struggled to get a dime. The lesson? The system favors the wealthy because they have the influence to ensure their survival. They have lobbyists, connections, and power to write the rules in their favor. If you want to play the game, you need to understand how these safety nets work and how you can position yourself to benefit from them rather than be a casualty. 2. Government bonds, the risk-free payday. While most people scramble to make ends meet, the wealthy are loading up on government bonds, essentially lending money to the government in exchange for a solid return with almost zero risk. These bonds are like a golden parachute. As long as the government stands, so does their fortune. It's a no-brainer investment during economic downturns. Why? Because when uncertainty rises, investors flock to safety. Government bonds are seen as one of the safest places to park money. During a recession, central banks often lower interest rates, making stocks more volatile. Bonds, however, provide a stable return, and when interest rates eventually rise again, the wealthy cash out at a premium. 3. Dumping or shorting stock before the crash. Being rich means being ahead of the curve. When COVID first broke out in China, billionaires and insider politicians quietly dumped vulnerable stocks and shorted the market. Hedge fund titan Bill Ackman turned $27 million into $2.6 billion by betting on the crash. Meanwhile, some U.S. senators cashed out millions before the public even knew what was coming. The game is rigged, but only if you're not playing it. The key here is information. The wealthy have access to analysts, private reports, and insider insights that allow them to act before the average investor even knows what's happening. They hedge their risks, buying put options to profit from market crashes while keeping their long-term positions intact. If you want to get ahead, start paying attention to early warning signs and learning how to hedge your investments. 4. Buying stocks at the bottom. When fear takes over and markets plunge, the wealthy go shopping. Stocks, real estate, entire companies, everything goes on sale during a recession. While the average person hoards toilet paper, the rich hoard assets. And when the economy recovers, their portfolios skyrocket. Case in point, those who bought during the 2020 crash saw massive gains as the market rebounded. Think about Warren Buffett's famous saying, "Be fearful when others are greedy, and greedy when others are fearful." The rich don't follow the crowd. They take advantage of it. They look at blue-chip stocks, solid real estate investments, and undervalued businesses, knowing that patience will turn their purchases into generational wealth. 5. Renegotiating everything. Recessions make businesses and banks desperate, and the rich take full advantage. They renegotiate loans, leases, supplier contracts, anything that can be tweaked to their benefit. While most people struggle to pay their bills, the wealthy are making phone calls and securing better deals, freeing up even more money for their next move. Landlords lower rent to keep tenants, banks restructure loans to avoid defaults, and suppliers offer discounts to maintain clients. The rich understand leverage and use it to cut costs and increase their profit margins, setting themselves up for greater success when the economy recovers. 6. buying bankrupt companies for pennies. Recessions force businesses into bankruptcy, but their assets, factories, tech, trained employees don't just disappear. The rich swoop in like vultures, buying up entire companies for a fraction of their value. Remember the airline and cruise industries in 2020? While some companies crumbled, others seized the opportunity to expand for dirt cheap. This is how wealth is built, by acquiring undervalued assets and turning them into money-making machines when the market rebounds. Smart investors don't just look at struggling companies, they look at their assets, intellectual property, and market share, knowing they can be revitalized at a fraction of their worth. Snatching up real estate at rock-bottom prices. A struggling economy means struggling homeowners. With job losses and tightened credit, many can't afford their mortgages. Property values drop, and that's when the rich step in, buying prime real estate at bargain prices. Years later, as the market rebounds, their wealth explodes. It's a predictable cycle, and the rich play it masterfully. Foreclosures and distressed sales create opportunities for those who have the cash to buy. They secure prime properties at half the price, rent them out, and watch their values appreciate over time. If you want to build wealth in real estate, recessions are when you should be aggressively buying. 8. Insurance, betting on the worst-case scenario. The wealthy don't just buy insurance, they profit from it. Case in point, Wimbledon paid $30 million over 20 years for pandemic insurance. When COVID hit, they cashed in a $140 million payout. Meanwhile, hedge funds shorted struggling insurance firms, making billions as disasters drove their stocks down. For the rich, every crisis is an opportunity. The strategy here is risk management. The rich protect their wealth by insuring against catastrophic events, ensuring that even when the worst happens, they come out ahead. 9. Low interest rates. Free money for the elite. When recessions hit, banks lower interest rates to encourage borrowing. The rich, they use this as an opportunity to refinance, take out cheap loans, and invest in more income-generating assets. While the average person struggles with credit approvals, the wealthy get handed money for almost nothing. Cheap money fuels acquisitions, stock buybacks, and asset purchases, allowing the rich to multiply their wealth at an accelerated pace. 10. More people looking for work equals cheaper labor. With job losses mounting, businesses have the upper hand. Wages drop, hiring costs plummet, and companies can operate more efficiently. It's an unfortunate reality, but one the wealthy take full advantage of. When competition for jobs is fierce, businesses thrive on lower expenses and higher profits. And that's a wrap for today. But here's the real takeaway. Recessions may crush the unprepared, but for those who know how to navigate the storm, they're a gold mine. The secret? Understanding the game, staying ahead of the curve, and making bold moves while everyone else is frozen in fear. If you found this valuable, don't keep it to yourself. Hit that like button and share it with someone who needs to hear this, and subscribe for more powerful wealth-building insights. Stay sharp, stay strategic, and as always, may you be blessed abundantly. Thanks for watching, and I'll see you in the next one.